Now, listen up because so many of you who just started out trading are still making the same mistakes and not trading with the trend. But don't worry, I'm here to help you out. In this video, I'm gonna show you not one, not two, but 3 simple and effective strategies to help you trade with the trend using free indicators. And of course, I'm gonna give you a set of rules that you need to follow for every single trade. But before we dive into that, let me introduce myself. I'm Ralph, and this is Trade Beta Channel, your go-to channel for everything day trading on forex, crypto and stocks. Now, I know some of you are struggling, and I've seen in my DMs, you're asking about specific trades and sharing your screens, but the problem is that you're trying to catch those trend reversal trades, which are just too advanced for beginner traders like you. So, let's focus on what really works, trading with the trend. Now, I'm gonna jump right into the charts and show you how to set up each strategy for maximum success. The currency pair that we're gonna use is the Euro-Japanese Yen. This pair has one of the most consistently moving trends in forex, so you know we're gonna make some profits today. But listen, you gotta follow each strategy closely and stick to the rules if you wanna see real results. So, let's get started and make some money. For our first strategy, we're going to be using the Fibonacci levels strategy. This is a super effective tool that you don't want to miss out on. So, let's start by adding some indicators to the chart. The first one we're gonna use is the Auto Fib by Yang. This one plots Fibonacci levels between the high and low of a time frame of your choosing. So, we're gonna open up the settings and change the fib length to 200 since we're on the 5-minute time frame. We'll also uncheck the 3 middle fib levels with these levels as well. Increase the brightness of the levels and uncheck other plot backgrounds. These levels of the Fibonacci are what we're gonna use to determine the trade entry for our trades. Next up, we're gonna add the Moving Average Convergence Divergence indicator by Chris Moody. Search for it and add it to the chart. Then, bring up the settings and uncheck these presets as follows. And that's it. There are different methods to buy and sell in the market, but the simplest and most effective one is this. For a buy signal, we're gonna wait for price action to cross and close above the green Fibonacci level. Next, we wait for the retest from our MACD, as we would want to see the MACD change to red, while we set to enter trade at the next green signal. So since our retest was at this point, and we waited for the next green signal, we would go long at this point. Please note that we only go long once the price action is still above the green Fibonacci level, and valid crosses are only those that happen below the MACD middle line. Exactly the opposite is true for a short trade. We open position for sell once we have our cross above the MACD middle line, while price action is still below the red Fibonacci level. You can also take a position using this strategy, as it gets you in on early trend moves. When you get a new close from price action as price closes above the green Fibonacci, after it runs below the red Fibonacci level, lock in your trade after the first retracement entry from the MACD. This strategy helps secure big trend moves. In the second place, we have the on-balance volume divergence strategy. First things first, let's add our indicators to the chart. We're gonna need the divergence for many indicators by Lonesome the Blue, which will help us identify the on-balance volume divergence. And let's face it, who doesn't love a good divergence? Am I right? So go to the settings and uncheck all these other options for divergences on other indicators, except for OBV. Now we can see we only take OBV signals on divergence. The OBV indicator is based on cumulative total volume. and it's gonna help us catch those market reversals or retracements, but we can't rely on it alone, which is why we're gonna add the ultimate moving average multi-timeframe indicator by Chris Moody. Don't worry, we're not gonna get into the nitty-gritty of the settings. All you gotta do is uncheck the first option in the input and change the time frame to 15 minutes with a length of 200. Then move over to the style and change all these to white while increasing its brightness. Simple, right? So, how do we use these indicators to make bank? Well, when price is sitting above the moving average, then we are in an uptrend, and when we are trending upward, we take trades when we get bullish OBV, and as we can see here, we had a good number of trades on this bullish trend. And exactly the opposite is true for short entries. We only need to see prices below our ultimate moving average. Take trades only when we have bearish OBV signals, while avoiding bullish OBV signals, and we could see good entry trades following the trend. Easy peasy. Please, if you are enjoying our videos, don't forget to smash the like button and subscribe to the channel, as it motivates us on the hunt for the Holy Grail. Moving on. For the top simple and effective strategy for all you beginners out there, stochastic overbought and oversold areas. The biggest lie I've heard while starting my journey as a trader is that overbought and oversold trading strategy is the most profitable strategy to ever exist. Now, while that may be true for some, it can always be false for some others. As a reversal trader, using areas of overbought to go low and oversold to go high will really profit you in the financial market. But since we're keeping it simple today, we'll be doing the exact opposite, entering trades when the signal line of the wave trend oscillator reaches those areas at the current trend of the market. And let me tell you, after years of expertise on Tradingview, this is one of the best overbought and oversold indicators on the platform. Shout out to Lazy Bear for making such an awesome tool. Now, to identify those trends, we won't be using the moving average. Instead, we'll be using the Donchian trend ribbon, which is another great indicator. Just change the Donchian channel period to 200 in the settings panel, and you're good to go. So, how do we enter trades? Simple. We wait for the Donchian trend entry green columns to indicate bullish volume or red columns to indicate bearish volume. Once we get a new green signal, we only enter a long position when the signal line crosses above the overbought area. Then, we wait until the momentum wave trend shows a retracement, with the red line crossing above the green signal line. Finally, we enter trades at the next green cross of the signal line, while both lines remain above the zero line. Now, as a newbie, it's important to start with a strategy that goes with trends. Once you master moving with the trend, you can try out other types of strategy. But for now, keep it simple and stay on trend. And don't forget to drop a comment down below if you had any questions. We'll be sure to respond to you as soon as possible. That's it for today's strategy, folks. Thanks for watching, and I'll see you in the next one.